A very good afternoon, ladies and gentlemen, and welcome to Steel Mint Engage. Engage is a 5-day webinar series being held from October 18th till the 22nd. We will hold 16 sessions covering 6 industry verticals, including iron ore, coal, scrap, and steel. Through more than 700 minutes of knowledge sharing, we will understand the perspectives of industry leaders and enable our clients to have a better understanding on how each sector is likely to pan out in the near future. We would like to take this opportunity to thank our esteemed sponsors for the event, NMTC, Tata Steel, and Rungta Steel. I'm Madhumita Mukherjee, Editor, Steel Mint, your host for the evening. I also introduce Nitish Shukul, who drives the steel vertical at Steel Mint, and my co-host this afternoon. Hello, Nitish.
Hi, ma'am.
In this session, our topic is what to expect from the Indian steel market in the short to medium term. Our esteemed guest this afternoon is Mr. Ranjan Dhar, Senior Vice President and Chief Marketing Officer at ArcelorMittal Nippon Steel, India. India's crude steel output stood at around 57.28 million tons and finished steel consumption at 48.95 million tons in H1 FY22, up by around 30% and 34% respectively compared to the corresponding period last year. Looking at the investment push in FY22 by the government of India, the Indian steel industry would be a major beneficiary in terms of generation of demand. However, the industry is now facing an unprecedented coal shortage, and the global semiconductor chip shortage is also impacting demand from the automobile and white goods sector. So how do the short and medium terms look like? We will hear a lot more on this from our honored guest, Mr. Ranjan Dhar, Senior Vice President and Chief Marketing Officer at ArcelorMittal Nippon Steel, India. Mr. Dhar is a seasoned steel industry professional with more than 2 decades of experience. He has spearheaded many roles and established many businesses in erstwhile SR Steel, now acquired by MNS India. Since October 2015, he has been heading the overall sales and marketing functions of domestic and exports of hot rolled, cold rolled, galvanized, large dia pipes, and service center business as Senior VP and CMO. We request Mr. Dhar to take over. Mr. Dhar, please go
Thank you,
ahead.
Madhumita, and very good afternoon, friends, all watching this webinar today. Happy to be here. It's just a lot of people who are watching this today know a lot about what is already happening in the steel industry worldwide and also in India. It is just a consolidation of those thoughts from our perspective. How do we look the short and medium term? That is the agenda which has been given to us. Before I start about the market, just a brief for all those people who do not know, brief about our company, ArcelorMittal Nippon Steel. It is the newest large steel entrant into the domestic industry. But when I say entrant, yes, this company in the earlier avatar of HRCR Steel existed. In the December of 2019, this was acquired by AM&NS, a joint venture of ArcelorMittal and Nippon Steel Limited, which are the 2 world's largest steel company. The ArcelorMittal, everybody knows. Nippon Steel is the largest steel company of Japan. So they came together and launched this joint venture, which is operating now in India since the December of 2019. Now, as we speak, as has been reported in many media reports, we have launched a mega expansion of AM&S capacities in India for the benefit of our customers. We have a stated position of going as a first step of 14 million ton, then 18 million ton, and our vision, which has been set by our management, to go to 30 million ton and even beyond. So within those expansions are various new age products, which in the world market are dominated by our parent companies, ArcelorMittal and Nippon Steel. All those new age products which are there in the world market will be launched in India from the production basis that we are expanding in India. So we are happy to be here and happy to participate in this growth of the Indian market. Now, the topic of today is this thing: how do we see the steel industry rather, the short and medium term? Just a perspective which will be, which many of you would be already aware of, is this is what the world is grappling with today. There's a huge volatility on the raw material prices. The coking coal is overstated. Every day there is news on that. The iron ore prices a little bit of a downtrend, but it is stabilizing at that level. Semiconductor shortage is a big issue which the world is grappling with. Auto industries, there are various news that whether it will last for 2 months, 3 months, 7 months, but all different theories are there. But yes, the world is facing this semiconductor shortage, which is impacting auto industry in a very, very big way. The auto industry perspective is that they should be able to find an answer to that in next 3 to 7 months in that time horizon. We are seeing increased government intervention on the steel and the commodity pricing, and various government, intervening with tax, with other measures in controlling these prices in the demand supply situation. Ocean freights has been recently a talk which has impacted the profitability, both in terms of the profitability of the companies, in terms of the cost of logistics, and also the timeline of the logistics due to the reduced availability of vessels, and this has also posted a challenge currently. COVID, the good news is that it is reducing in many parts of the world, but there are some pockets wherein sporadically it is increasing at some point in time, but overall the situation looks to be under control. Geopolitical tensions, geopolitical issues are determining how the crude prices are getting impacted world over. And carbon emission is a big one, which I think is here to stay. And steel industry is going into our own parent, going into new generation technologies of reducing the carbon emissions, reducing the carbon footprint for the steel making, and this will remain to be a major challenge for the steel industry, and it should change the total cost dynamics of the way the steel industry is operating till now. Talking about the specific geographies, the way we see China, again, many of you would be tracking it. There was a government initiative that the production of 2021, the calendar year, should be equal or lower than the year 2022. The way we look at it, that will be achieved by the Chinese steel mills. They will not exceed the production in 2021 with what they have done in 2020. What we are noticing now is that September, October, December should be in the range of around 78 to 80 million ton per month, which will then achieve these numbers. We are noticing that after rapid recovery, after the first phase of the pandemic in the Chinese market, the Chinese economy, due to various reasons, one is Chinese government own induced slowdown, and the power crisis, electricity crisis, and other factors, we are seeing slowing down in the Chinese economy, which is reflected in the PMI. Let us say from May, June onwards, it is declining, and looks like that will continue to decline at least for next 5 to 6 months. So, what is causing the power crisis in China? It is a slide on that. So the Chinese, the climate goal that China has taken net neutrality by 2060. Remember, it is not 2050 like the Paris Accord, but they have their own, time benchmark of 2060 because they have a huge impact on the world environment, and they have taken this target. So the coal dependency on the power is 60%, and the Chinese consume around 50% of the world coal consumption for power. So this is a huge impact which is there, and when they are talking about the environment, this is causing this whole crisis. So coal production, there's no alternate power generation from the alternate route, which is happening too much in China. So when there is a disruption on the coal side, that affects the demand, and also it happened because of the geopolitical tension between Australia and China, wherein the coal imports got impacted, and also the demand went up after pandemic, and the whole, in brief, caused this current power crisis in China. Now, in the ASEAN region, Vietnam, we see that there was a wave 2, which impacted the Vietnamese consumption quite drastically in the Q2. But we are seeing a little bit of an improvement now onwards, and the other geographies also trying to lift up their consumption. And you're seeing in the PMIs of various ASEAN region, Indonesia is higher, Malaysia is improving, Thailand is improving, Philippines is doing good, and even Vietnam, after we are noticing after October, has started improving. That is also reflected in the activities in the chart below, that you will see how the CFR level of the prices are moving in Indonesia. We saw the low by Russian mills operating there around 850, 870 range, but those levels are improving by the day as we are talking. So improvements overall happening in the ASEAN region. Eurozone, after the huge rally which happened from March onwards in the consumption and shortage, and everybody started participating in the European region, we are seeing, I would not say slowdown, but a normalization of things are happening. If you have to talk about slowdown, then probably only one sector, due to, again, semiconductor, the auto shrinkage which is happening, auto consumption shrinkage which is happening in the Europe, is affecting the steel consumption. But there are other sectors which are doing well, and little bit of a normal level of consumption and prices driving, because the speculative demand which the traders and everybody else were doing in Europe, due to this whole idea of shortage and huge gap between the demand and the supply, that phase we see is over at this time. And you will see the chart below at how the imports happened in Q2 between the three major importing countries, that is Russia, Turkey, and India. There was pretty much over 3.5 million ton of imports which happened in this period. And this was largely because of the speculative buying by the traders and stocking, thinking in anticipation that there will be huge demand supply gap, which was there at that point in time. But I think that has been met now, and you will see a stabilizing phase in this region. India's story looks to be strong. It continues to be strong. We are, as a company, also totally focused and totally convinced that India's story is here to remain in a very formidable way. It is, as recently the IMF has, come up with their numbers. In the calendar year 2022, India will be one of the top most growing economy in the world. So that thought is even shared by us as a company. India is not posing any threat to the world economy. We are not like the country which will keep on producing goods and services in such an extent that we will keep on dumping to other countries. It will be only an incremental thing which will happen as exports. Largely, we are a domestic focused economy. The domestic consumption is growing fast, and all the capacity expansions which are happening in India, both on the raw material side and also on the finished goods side, is happening largely for the need of India. These are the India numbers. You will see the PMI, how the manufacturing PMI has progressed, and little bit of a taper which happened in from July to August, but we are seeing even the October number comes, they will be in the growth range. GDP next year, there have been various numbers, but it is looking very strong. IIP did taper after COVID wave 2, but started improving now. Again, what we notice from our own intelligence data, that from September, October onwards, you will see this trend improving. And unemployment rate, though it has gone up a little bit in the month of July, August, but it will again come down from now onwards. So overall, at the macro level, the Indian economy looks in a very right place to propel the growth, which should happen in a strong way from the first quarter of the calendar year 2022. This is on the steel scene. Well, many of you would be aware, Madhumita also talked about, we think that this year, calendar year, the crude steel production will be 115, and next year it will go to 121. Apparent steel consumption will be 104. Various initiatives launched by government is that the Make in India initiative, the Atmanirbhar Bharat, actually we are dovetailing the both together in it. The urban housing, smart city projects, and one more, if you see one more big initiative which has impacted the steel consumption is the Nal Se Jal initiative, which is not getting talked about too much. But I think when you go at the grassroots level, that has also propelled the consumption of steel in the country, and it has also propelled the growth. And apart from steel, the Nal Se Jal does a lot of other things in the rural economy when the water is available at each household and people have more time available to do things other than just fetching the water. This also brings in a different amount of growth in the rural economy, which is being witnessed, and people focus on manufacturing, people focus on agriculture, people focus on doing more things, and which propels the rural economy as a whole. So overall, Indian demand looks very strong, and all these sectors like general engineering, pipe and tube, construction, and automotive. Automotive is currently going through a bit of a dip due to external reasons, but the latent demand, which is reflected that the auto waiting period for some model has gone as high as 8 to 9 months. So that means that people do want to buy more automobile, but due to the supply issues currently, it is not growing at the way it should, but it will soon come back. This is on the flat steel side, but I think I've covered in the because AMNS is currently in the flat steel, so we have given a flat steel perspective. We are seeing the same trend, which is there in overall steel on the flat steel perspective also, wherein the demand supply looks to be robust. The demand is growing very fast. The imports we think will keep on coming down, and the exports will also come down. So that when the domestic requirement goes up, export, as I've been stating in many forums, export, the Indian steel industry does only and only when there is lesser demand in the domestic market. After servicing the domestic demand in full is when the Indian steel industry exports. So as you see the domestic, as we have seen also in the month of January, if you see in this chart, when the domestic demand was good in the month of January, February, the exports are very low. When the demand has fallen due to COVID wave 2 and all that, then the exports number has gone down. We see that repeat of Jan playing in the future months. I anticipate when the domestic demand will be good, you will see reduced exports coming in. And now, with such a big capacity in the domestic market itself, there is hardly any need to import anything in the country. This is a slide which also gets talked about less, is the impact of coal and coking coal prices on the cost of Indian steel producers, which barring few is largely imported. So this is the cost which has gone up, the price which has gone up from January is around 23,500 rupees. And if you translate it to at the steel level, it comes to around 18 to 19,000 rupees a ton is the impact of coal alone. Then people will talk about that the iron ore has come down. Yes, India does not import iron ore. So if you see the change in the iron ore, it is now 1,275 rupees, 1,300 rupees. But even if you say domestic iron ore reduced by around 1,000 rupees. So if you translate that back to steel, it will be 1,900 rupees, 2,000 rupees. So 2,000 rupees drop on the iron ore side versus around 19,000 rupees increase on the coal coking coal side. The net impact is very high, and that is what the steel industry is grappling with today in India and also across the globe. This is our perspective of the steel consuming sectors year on year, how they will grow. We have done a forecast of the calendar year 2022. Construction industry. The way to read this chart is that you have to see the last bar as a growth versus the previous bar, and the green ones are the negative which happened due to COVID in the last year. So look at the last two bars, which is the growth that we will do in the current year, and more importantly, what we will do on the next year on top of the base of the current year. So construction in next year will grow at 6.5%. Capital goods around 4.5%. Automotive, I personally think it should be higher than 8.3 because in this year we might actually go a little lower because of the semiconductor shortage. It should be around 10-11%. And railways 6.9%, consumer durables 13-14%, and intermediate goods around 8 to 9%. So this overall gives a scenario that each consuming sector will do very, very well in the next year, starting January. So in nutshell, this is how we look at the scenario currently in the short to medium term. The global economy is on the recovery trajectory. Impact of COVID is minimal now, but some sporadic issues can happen at state cases. China's slowdown is a reality. Still, supply opportunities will come to India and many other countries when China will vacate from many of these markets. Then the major steel producing consuming countries will not have any gap. This means that the steel will be produced where it is consumed, like what is happening in India. The focus on carbon net neutrality will be very high, and the investment to achieve that will be very high. That will change the entire investment dynamics, capex dynamics, and the cost dynamics of the Indian steel industry worldwide. The high raw material prices should stabilize sometime in the second half of 2022 is our view. The market will then be governed by more on the demand side than on the cost side. India is recovering and the growth potential remains. India also has the potential to become large-scale exporter. Now, why I want to qualify this statement. What I think is happening is that whenever the exports happen, largely the importing country imports the commodity variety of steel, and the specialty steel is usually produced locally. What I feel and I think and I'm a firm believer of is that India will increasingly take the space of value-added exports, wherein infrastructure demand, even automotive demand, when these formidable and credible capacities are getting developed in India, India will become an answer to the world, not only for the steel as a whole, but specialty steel specifically. So India has a huge opportunity, not only for the domestic market, which of course is there, and also be an answer for a long-term partner, a credible partner, and a value-added steel partner for the world. Thank you.
Thank you, Mr. Thar, for such a detailed presentation. You have covered almost everything that we wanted to ask you on, actually. But still, we have a few broad spectrum topics on which we would like to discuss, to get your opinion before we throw the floor open to our audience to ask. You said that domestic demand will be good, and we saw that the PMI is up month on month in September. But having said that, we have entered an unprecedented scenario of a coal crisis and an ensuing power crisis. Earlier, mills were optimistic of demand picking up in October-December quarter, but the coal and power crisis may disrupt industrial activity. There are fears of that happening, leading to curtailing of production across downstream using industries. Every day we hear news of the critically low coal stocks at power plants. So in this regard, how baseless are these fears really? I mean, how do you look at the situation? Do you feel that will there be actually a slowdown in industrial activity going forward? And are fears of steel demand taking a hit baseless?
I personally do not think so, and our company view is also that we do not think that is happening in India, because you have to remember that the import dependency for power generation in India is limited. It's limited to 25-30%. So, and that gap of 25-30% which are getting imported is also being fast filled in by the state-owned coal companies like Coal India, wherein the government of India has come in a very right time in pushing the production up, and we have seen the results also. The coal production is going up. So I see a limited impact on this translating into a coal crisis. Do not see that happening, and we have not seen the touchwood that happening till now. And I think the sentiments post-2, the sentiments post-monsoon, and the increasing optimism, and I hope that remains and that is true, that the wave 3 is not going to impact us in a big way. Yes, fingers crossed for the festive period which is happening currently in India. But I think largely because of the large population, over 70% of the population has been given the dose 1 of the vaccine, and the dose 2 also happening. I think we should be able to control the wave 3, even if that happens in a very lower, at a lower level. So that should remain, that should keep the sentiments, business sentiment overall optimistic and high. Because remember that India had started on a very optimistic and a growth mode in the January, February, March period. And then the wave 2 happened, and that dampened this thing. So that latent demand, latent spirit for a high growth phase is there, which got impacted by the wave 2, which should come back, or which is coming back. We are also already noticing from the month of, from the start of this month, that many sectors are playing back. The auto did not play back only because of unfortunate incident on the semiconductors. And when we talk to the auto people, what we hear is that auto industry should soon have the answer to that as well. And when that happens, you will see an incremental growth even in the automotive space also.
Nitish, would you like to ask?
Sir, so I have a question. So essentially, sir, the key drivers for demand in our country, particularly, auto, real estate, shipbuilding, consumer durables. How do you see the demand panning out from each of these sectors in the near term? Auto, you rightly pointed out, we've been hearing the same things, but housing has, picked up off late. But how do you see the demand coming in from these sectors, in the short to medium term? One is this, sir. And the second part of my question was that how do you see the demand from the trade segment, unfolding in the short to medium term?
Auto industry, we have already said, but if you see on the housing side, housing construction side, I think the demand pickup has been very good. It's actually exponential. You see the new house registration which is happening in major cities in the country. So it is a very impressive growth which is happening there. Together with that, I think a big demand pull is also happening in the infrastructure space. What happened in the last few months, there was a bit of lesser activity in the infrastructure space because people had got this tender at a lower price, and then the steel prices went up. They were not able to conclude those deals. Some deferment was happening and all that. But I think new tenders are being floated, revised budgets are being taken, because we do not know this prices, the steel prices, the commodity prices, both on the cost side and also price side, is here to stay for some time. So the country needs to move forward. So I think that sense is getting into the minds, and I think the progress also happening on the infrastructure space, which should also start propelling at a very fast pace, is our sense. On the trade side, the problem then the trader is that, this I've been saying in various forums, a lot of the trade buying happens due to speculation. In fact, my advice through this forum to all the traders is that they should buy on a regular basis towards the need of the market rather than towards speculation. So when there is a speculation, the price will go up. Everybody will line up to stock up, and which happens naturally. But when you are domestically focused trader, when you are in the market buying and selling every month, it is better that you buy and sell every month based on the need of the market, and the average result would be same as when you are doing speculation and buying and selling. So what happens when the speculation is not there, when they don't feel the price are moving up, the buying is less, 50% of the normal. When they think the price are going up, the buying is 2x. So that phenomena creates a sinusoidal curve in terms of buying and supplying the trade segment. Currently in October, there is a big euphoria of buying by the traders because the prices are going up. Tomorrow, when they think the prices are not going up in a few months, then they will. So I think it is better that a consistent buying, selling happens by the traders also, which is in their benefit also, because then they will give a long-term solution to the steel mills and also to their customers.
All right. So touched upon the vessel industry a bit. So I just wanted to understand the demand for heavy plates for shipbuilding. how do you see the demand unfolding in short to medium term?
The good part is that we are ourselves in very big way in the heavy plate segment, and heavy plate have been lagging behind. So the cost of making plate is higher than the cost of making the coil, but plate remained always for a long period of time below the coil selling price due to lesser infrastructure activity and all that. But the good part is, in last 2-3 months, we are seeing a huge demand recovery for the heavy plates, and this gives the sense that a lot of infrastructure, your earlier question, a lot of infrastructure demand is coming back. Shipbuilding is also coming back worldwide. Yes, in India, we do not have too many shipbuilders, but I think this space should get developed also in India. And worldwide, there is a demand which has propelled, and that is also causing the higher demand for the plates.
Thank you.
Mr. Dhar, I had one question for you. You said that Vietnam and Southeast Asia are coming back strongly. So what is the scenario with regard to November shipments? Are these coming back strongly too for the mills? And while I'm on this, you also said that Eurozone is not slowing down, but is in a neutralization stage, I think. So how does Q1 of next year, 2022, look like from in terms of Europe? And overall, especially since China's exports are under such pressure and the production cuts are picking up pace. If you could club both and answer.
See, what happened in Europe basically is that, as I said in my slides, that in past few quarters, everybody in Europe bought more. Simply that. They bought more with respect to what they needed actually. So now that overhang remained. Until December. My personal view is that Europe will also come back to buying. From the mid of November, Europe will also come back to buying for the January-March quarter. Okay. And now people are, that's why I use the term normalized. So people have got normalized. So if you see traditionally how the price differentials used to be there. So Europe and Southeast Asia used to play in a similar range. Europe and Southeast Asia used to play in a similar range. Then there was one US which was always higher, which continues to be higher. But what happened in early this part of this year is that Europe prices, the benchmark changed quite drastically different from the rest of the world, just below US, because of the speculative buying which happened. There was a demand supply gap and all that. Europe will come back to buying from India, and Europe has been India's traditional market, and it will come back in a normal way, in a normal phase. And then this is a quota available. Indian mills will participate in that quota, and there will be no oversupply. The customers will be cautious. The suppliers will be cautious. Sorry, there was some second part of your question on Southeast Asia.
Yeah, my first part of the question was actually on Southeast Asia. With Vietnam and Southeast Asia coming back strongly, what is the booking scenario like for Indian mills for November?
So some booking has happened. Some mills have booked again into Southeast Asia at a level which is higher than what Russians have been operating in. In fact, the Southeast Asian demand has come back, as I've shown in my slide also. But what is happening, a bit of a price disruption was being caused over there by the participation of Russian mills at a lower price and all that. So we anticipate that phase will also get over because the cost pressure worldwide is changing, as I'm saying. Right? In fact, the cost impact for the steel mills world over average will be close to about $200-$250. Now, how much of that cost can get passed into the market we will have to see. But everybody is impacted, so I don't see that low phase of steel remaining there, even from Russian mills, and that should improve. The people were in a wait and watch mode of what will happen on the price scene because the Russians are participating at a lower number. Indian mills were holding at a higher level of around about 900, 920. We have seen some deals have started happening from the Indian mills. I think it will only progress forward.
Right.
So I have one question. So I just wanted to understand from the domestic, on the domestic perspective, the HRC-CRC spread has come down from 16,500 levels in mid-June to around 5,000 levels as we speak. So do you feel that, we have reached the optimal level, or do you feel that the gap is likely to, further come down a bit? What is your take on that? And also your take on the HRC and rebar spread, sir. Considering the fact that longs prices have been soaring up quite extensively of late, what would your take be on the HRC rebar spread as well?
So HRC rebar spread, actually rebar is a highly volatile product. It remains highly volatile in terms of price. This is a demand supply. I think rebar has gone into the high price regime. It will remain there for some time due to reasons, because rebar worldwide is doing good, construction demand is improving, and some supply shortage will also happen from the rebar side due to various reasons on the cost side and all that. So the supply side will remain a little bit under control, and that should keep the rebar prices holding up. In terms of the spreads of HR and CR, the 5,000 rupees spread we have not seen. Yes, some traders might have done a deal in the market, but from the mill perspective, that spread has not gone below 10,000 rupees a ton. So, and I think that the world went to a spread of around 25,000-30,000 rupees also. India did not see that spread. Yes, it went to around 18,000-19,000 rupees, even 20,000 rupees. But I think, I'm just hazarding a guess, but I think it should stabilize in the range, not where it was earlier, because the cost structure has gone up, but it should stabilize in the range of around 10,000-12,000 rupees.
Mr. Dhar, I have one quick question before we go over to our viewers, and that is the Q2 auto contracts have not been sealed yet. Any comments? Are the price quoted by the mills being accepted?
So this is an ongoing question by you, but I will try to answer. So auto contracts, first I should say where we agree with the auto people on. Where we agree, as I've said this in many forums, is that there is a way we settle the auto prices. The way we settle the auto prices is linked to an index. And there are various index, your own index, and there is CRISIL index, which is followed by SIAM and all that. So some index or the other is followed to settle the prices. Now index is giving a number. That number is not challenged by the auto people. We know that that number is recognized. Now what is getting discussed and where the delay is happening is how to implement that number. How much in Q2, how much in Q3, how much in H2 and all that. So that is a point which is getting discussed. I hope that within the next week maximum, we should be able to settle this, because it has got inordinately delayed. And in fact, it is not the right thing to do to delay it. When you have a method of arriving at a price, there is no reason why we should delay.
Right. Then Q3 contracts, do you think prices would be higher from the mill side for the Q3 contracts?
See, again, it depends. If you see, it again depends on the same thing. How do we implement the index? How much in Q2, how much in Q3? We have got one auto contract which has been done at around 9,000 rupees and 11,000 rupees. So that is I think, credible and right benchmark at which level this price should get set.
Okay. Now, thank you so much. We go over to our viewers. They are impatiently waiting. As a gentleman has asked, steel prices are at multi-year high currently. When do you expect prices to cool down, or are they going to stay at these levels? And if I may add another question to this from Mr. Bhavin Bhuta from Hina Steel, what kind of peak price levels in HR coils are you looking at?
We do not know. We exactly do not know what price levels will get achieved, very frankly with you. And sometimes people think that steel industry is aware. Steel industry is also not aware what price level will get achieved. We have to follow the market, whatever happens. You see, as I said, I personally feel that the cost impact is going to stay here for a long time. There are certain costs which will come down. There are certain other costs which will go up. Now, when you have to do a carbon net neutrality, the amount of technology cost will go up many folds. So, so I think the cost impact is here to remain. And with that cost impact, there will be lesser amount of mills which will be able to produce commercially viable steel at those cost levels. So only those steel companies will produce, and also some capacities will go off because they will not be environment friendly. I'm talking about in the long-term fashion. So in that way, the steel prices looks that it will remain elevated. In the short and medium term, if I have to talk about, in the short and medium term, the cost impact, as I said, for the mills will be around $200, $250 mill to mill. So even if you have to pass on 50% of that to the market, not 100%, then you are looking at around $100, $120 for a price increase. We have to see how does it play.
Of late we have seen that the Indian mills have been quite bullish on the exports front. Roughly around 30 to 35% of the quarterly produce has been diverted to overseas markets. So I just wanted to understand any new markets, that the mills are exploring. Considering that China has, cut its production and they've even curtailed their exports. So any new markets, that you feel, can be the next Vietnam or the next, Europe for India?
See, on the export front first, remember, I've been stating it again and again, the steel mills in India only export when domestic demand is lower. It is a gap fill. If you see, it is not only a price. Many times people think that the export gives higher price, so steel mills make a beeline for exporting. No, the data I was showing earlier, January, February, March, also the steel export prices were higher than the domestic prices. But you found that the exports were at far lower in number. The reason was that domestic demand at that point was good, even if at a lower price than the exports. So whenever the domestic demand is there, first domestic will be supplied and then only export will be supplied. That is the principle the Indian steel industry follows, and that will get continued. In terms of new market, yes, in fact, I personally thought that would have happened earlier, but it does not happen due to COVID and various reasons. I think Vietnam will expand to buy further from India. Other Southeast Asian ASEAN region will buy further from India. Also Middle East and also many other regions. Middle East already India is buying from India, but there will be newer geographies. Africa, for example, wherein China was participating a lot, is the region which can get opened up for the Indian steel industry.
How about Canada, sir?
Sorry?
How about Canada?
Canada is buying the steel mills in India have contributed some amount of tonnage into Canada. That whatever is the gap there will participate. But with this increased freight, it is not looking so attractive. But let us see.
We have a question.
Yes, go ahead.
We have a question from one of the viewers from Vedanta Global. Do you see India as a new steel market for the world after China's major real estate companies' debt issues?
Meaning that whether the international mills will focus on India as supplying? Is that the question?
I guess so.
I don't think so, because Indian mills have capacity to cater to all the demand. So there is no gap. So if that is what is meant by the companies world over dump into India, I doubt it. But let us see. I personally doubt it. I doubt that scenario playing out.
A gentleman called Jinesh Shah wants to know where do you see China's steel production capacity going next year? Will China ramp up production next year post Olympics? Also need your views on iron ore price trends next year. If you'd like to take that question.
Difficult to predict China, but I do not see China increasing the production even in the year 2022. They will go into the environment side, and for that they will go into probably producing the steel as much as they need for their own market, not for the global market. That's what I feel. I don't know prices. The trends are there. The future, there are many people who are predicting it. I don't want to hazard a guess on that. Some people are saying it will range between $80 to $90. There is a view that will stabilize around $130.
Right. While on the question of carbon emissions and China's carbon emissions, you mentioned that carbon emission related investments are going to be a thing of the future. Now, where is India? I mean, how prepared is India for that? Indian mills.
See, India has to first grow. If we have to balance our growth journey with the carbon net, because all these economies, including China, they have achieved a level of growth. They have achieved a level of, in fact, I personally feel that the growth that India as a country needs to track is per capita income. That is actually the right benchmark for everything else. Then that is the right benchmark for the prosperity of the nation. When people have got more purchasing power, when people have more income in their hand. So India needs to achieve that first. Yes, we will do it in an environment-friendly way. But I think we have to achieve that first before we go into the benchmark of the developed nations like Europe and US or even China and all that. So first we need to propel our growth, because we cannot be pushed down as a country, is my personal view, not to grow and follow the benchmarks which the other world economies are following, because otherwise India will not become a prosperous nation in a short span of time. And I think the government is seized of this issue.
A couple of questions from our viewers on MNS India. One is, are you looking to enter long steels? And secondly, does MNS India plan to increase production? Secondly, do you see more international players entering Indian markets? Mr. Rahul Tekriwal.
Yes, as I said earlier, we have already started the expansion phase. We have said that we will go in phases from current producing capacity of around 7.5 million ton to 14 million ton to 18 million ton. And then the vision to 30 million ton. One part up to 18 million ton, we think our expansion will happen on the west coast, which is Hazira. Then the expansion beyond 18 million ton will happen on the east coast, and to 30 million ton. And that, let us see, India has opportunities on M&A also, which has been our stated position. We are keenly looking at M&A. And let us see if we get some long products from the M&A, then we'll enter long products. So we'll see.
Okay, that's news. So you're looking at long products through M&As.
I'm just said that the M&A, everybody's looking at. If in the M&A there is long products, then we can enter long products.
Right. So acquisitions are on the radar.
We will look at all the opportunities in India. Whether we get them or not, that is a matter of time will tell, but we will look at all.
Right.
We have one question from the audience. What is the peak HRC, CRC price levels that you are foreseeing in the near future?
Well, I think I thought I answered that question. Who knows the peak? How do I define the peak? What is the peak price? We have seen the peak of HRC earlier around 72,000 rupees. In the trade market, the mills have not done the trade market. I see that price again have been established today. As from the cost perspective, the price should go up again by $150. We will see. I don't know. Difficult to say. Difficult to answer that.
Okay, I think we have exceeded the time limit actually, and we have a few more questions, and we can take these queries and send to you, Mr. Thar. You can answer them later.
Sure.
I hope.
Yeah. Sure.
So I think we will have to end the session. Again, a big thank you, Mr. Dhar. We know you're a very busy person. Thank you for joining us. And thank you to our viewers too for joining in. I hope everyone enjoyed the session. Also, we would like to extend our thank you and gratitude to the Indian Steel Association and Steel Users Federation of India for their valued support.